And now we turn to the venture lens with Ken Fine, CEO of Affinity, and really excited to explore where the capital is flowing. Welcome to the show, Ken.
Thank you. Great to be here.
Running any triathlons lately?
Any triathlons? I wasn't expecting that topic. My next triathlon is in the fall, and I'm starting to train. So that could be a fun session unto itself. Are we ready to kick off here?
Yep. Stage is yours.
Okay, then we shall do so. Why don't I begin with introductions? So I'm moderating the VC roundtable today, where we'll be looking at the impact of AI on VC investing. I'm the CEO of Affinity. I've been at Affinity for about a year. Spent the previous 25, 27 years in high growth B2B SaaS companies, multiple different roles, running product, marketing, CCO, CEO. Have seen B2B SaaS in many different stages and many different perspectives. Why don't we do some introductions, and then we can talk about the topics. I'll give a little background about Affinity and then hand off to the panel, and then I'll come back and tee things up. Affinity is a relationship intelligence platform used in private capital by venture capitalists and private equity as well. Essentially, we enable our customers to leverage their full relationship graph or network in service of workflows such as sourcing, deal flow, portfolio management, other front office activities. Why don't I hand off to the panel to introduce themselves? Jeremy, should we start with you?
Sure. Hey, everybody. I'm Jeremy Kaufman. I'm a partner at Scale Venture Partners in San Francisco, focus on Series A and Series B enterprise tech companies. And I personally spend a lot of time at the application layer. So excited to chat with everybody.
Excellent. Thomas?
And so, Thomas, I'm a partner at RTP Global. We're an early stage fund focusing on seed and Series A globally across US, Europe, and India. And I spend most of my time on the application layer as well.
Very good. Welcome. And Kathleen?
Hi, I'm Kathleen. I'm a partner at Pair, a proud supporter of Affinity, who's a Pair portfolio company. We focus on early stage, so pre-seed and seed, and I focus mostly on the application layer as well.
And thank you, Kathleen, for your support. And finally,
Hi, my name is Hadley Harris, co-founder and general partner of ENIAC Ventures. We're also an Affinity user. I mainly focus on AI, both kind of application layer and more kind of tooling lower in the stack. Been working in AI a long time, built a company called Vlingo that was first voice-based assistant and later kind of got folded into Siri back in 2007 to 2011. So excited to be here.
excellent. Great to have all of you here. I'll tee up the topics and then we'll get started. So again, we're looking at the impact of AI and VC investing, and we'll also talk about some trends, input, suggestions for founders, CEO, executives in the space. Some of the subtopics we're about to cover include how agentic AI is replacing or enhancing the workforce or the workforce model, workforce-driven model for investing, how that relates to the importance of scalable compute infrastructure. Also digging into the roles of agentic AI versus people and where is it supportive, where is it replacing, and then finally the impact on founders and operators. A couple data points to get us started. If you look at investment dollars and percentages in AI and machine learning tools over the last couple of years, in 2024, about 46% of all investing went to AI and machine learning related applications, whether that's at the application layer or at the infrastructure layer. You go back just 1 year, that's about 36%. So clearly investment dollars are going in that direction. Similarly, if you look at data center specific investments in 2024, about 50 billion. In 2020, about 11 billion. So two relevant data points there to tee up the first question, which is, as we look at the way investors take a look at and evaluate investing opportunities, how does that analysis or that consideration balance people and traditional human capital and talent versus scalable infrastructure, GPU capacity, and the ability to scale AI investments. Who would like to take that first?
I guess if no one else is saying so, I'll start. I mean, it's a broad set of topics. I mean, I think the number one trend everybody's trying to work their way through is just this idea of software AI actually eating into the labor budget. Like everyone frames it as SaaS was workflow, and now AI is eating to labor budgets. And I think another way to to talk about the title of this panel, kind of GPU. How does that translate into labor? So I think one thing that I've been trying to work through in my own mind is, 2 years ago, 3 years ago, when ChatGPT came out, we tried to just actually do an assessment of, like, in the different business verticals, whether it's sales or legal or medical, like actually count the different tasks being done and then try to think about the number of people completing that task and then the hourly wage rate. Because I think in this new world, we're all trying to think about new opportunities for software to eat work, and it's helpful to actually start by defining what is the work being done. So one of the things that we did is we counted the number of lawyers, wage rate, number of paralegals, wage rate, and we're trying to do that across a number of these sectors. So I think at a high level, we're all just trying to think about what's the marginal dollars that eating this labor can capture above and beyond workflow TAM.
And Jeremy, what are some of the insights that you found in terms of where the greater penetration of AI might be in our day? Are there any bigger patterns?
Nicely, it coincides very well with the prices venture capitalists are paying for the late stage startups in those respective spaces. So when you do that relative sizing, number one and number two, not shockingly, are code generation and customer support. And there's logic to why a bunch of the late stage VCs are paying those very high prices for a $7 million ARR business, just because when you do the relative market sizing, there's a lot of dollars in those spaces. So I think the two that stood out just from a raw dollars horizontal standpoint were code generation and customer support. And then in the vertical space, obviously you think about a couple of interesting data points. I mean, I think doctors, financial services professionals, and lawyers are the ones with the highest wage rates. And then when you think about what venture capitalists have funded, I mean, it's not surprising, Harvey, Case Text, all the legal AI companies, the medical AI companies. We did that analysis, and then you're like, shoot, maybe I should have done that 6 months earlier, because it actually has coincided with what a lot of the VCs have funded.
Yeah, maybe
Yeah,
oh, go ahead, Thomas.
Okay.
Oh, yeah, I was just going to kind of add on to what Jeremy was saying. I think if you look at kind of the types of things that were being replaced probably like a couple of years ago, kind of the first things to go were the ones that Jeremy mentioned, because those are the biggest opportunities. And I'm a seed stage investor. A lot of you guys do seed some a little later. I think if you look at where a lot of the new money's going in right now, it's more vertical specific. I think there's a notion that that's what's more defensible, and hasn't been kind of gobbled up by like the first wave, even kind of your Harveys and whatnot. And at least for us, yeah, we're kind of you see a lot of kind of very niche verticals that you couldn't build software in before because there was so unstructured, that maybe it didn't make sense to build software in because they were relatively small. But then when you add the labor to the software opportunity, they get kind of venture backable. And then you have the really big ones, and probably where we've been spending most of the time are kind of healthcare, financial services, where you just have a lot. If you look at kind of labor markets overall, like healthcare is the largest sector, and a lot of it is back office kind of manual processes that can be automated. So I think you're seeing like a ton of companies built there and some big ones will emerge.
Yeah, I think what's interesting as well is that all the industries that were maybe not typically buying software also kind of leapfrogging, and then starting to adopt AI tooling, and that's pretty new. So if you think about even like sectors like agriculture, manufacturing, supply chain, etc., they were like where traditional software penetration was relatively low. those industries are adopting AI faster than before. So actually, the TAM that we see is much larger than it looks. And actually, if you look beyond, the obvious industries, there's actually a much bigger opportunity out there. So I think that's what especially interesting about AI. I think it's the adoption across all those sectors, and it feels like easy to adopt to a lot of industries.
I think the big opportunities, I would agree with Hadley. I think on the earliest stage, we're seeing a ton of very verticals with like very specific workflows for those verticals as kind of big opportunities. And then I think the sort of native AI UX designed products that I think are sort of the AI native version of something, I think is like a super exciting opportunity in the application layer, where you kind of rethink, like a lot of times it was a human going and like pushing the buttons, but if it's a machine, then what does the new UX actually need to look like? And then where does the human orchestrate that from, at what level of depth within the application, I think is pretty interesting.
So it sounds like a few common trends and themes. One is vertical specific applications to automate and enhance workflows across those verticals, as well as investments just more generally at the application layer, and building AI native applications as opposed to bolting on AI capabilities to existing applications. Are you seeing any trends in terms of investments at the application layer, which is where a number of you invest, versus the infrastructure layer, which ostensibly could be more horizontal and support multiple, companies supporting multiple different verticals, and how you see your firms spending, investing their dollars?
Yeah, I can maybe start off just because I historically do both. I think if you look back a year or two, I've kind of moved from more infrastructure to tooling, and then now much more application layer. So I'm spending almost all of my time at the application layer. And part of that is because I'm a seed investor. Like, I think investing at some of those lower levels at this point in the cycles is really difficult. We have small funds, and we're not kind of doing $100 million seed rounds. But also, I think it kind of talks to the opportunity that we see again within these verticals. So I think there has been, and I think generally you see, at least at the early stages, you see that general trend.
Okay. Other comments on that trend, application layer versus infrastructure layer, vertical versus horizontal?
For us, I think historically we've tended to shy away from the infrastructure layer just because it tends to be very capital intensive with a few winners. So there's always a risk that you can sink a lot of capital and back the wrong company. So I think in the application layers you can find like many winners. But in the infrastructure layer, I think the risk of your commoditization is very real, and the risk of being disrupted is quite high as well. And if you think about the cost or the capital necessary to be a competitor in the global stage is really, really high. We've seen it in Europe with contenders to OpenAI, like the likes of Mistral in France, etc. It's very costly just to buy an entry ticket in that race.
I would add, I mean, one of the interesting dynamics at the app layer is just the sheer number of competitors in a defined category. I mean, I would have thought 4 or 5 years ago, again, I do A and B. So at the A and B stage, it was usually there were 2 or 3 there, and you could be logical and rational and you kind of figure out the 1 or 2. I mean, I feel like when I'm looking at an A now, I've got 8 to sort through, and somehow you've got to sort through them all before somebody else does. And I'm intrigued at the seed stage how you guys are, what you are weighting, whether it comes to industry expertise versus technical expertise versus just recognizing you have to invest in more companies given you're in a 1 in 8 world versus a 1 in 4 world or something like that.
I think that's been the hardest thing at pre-seed and seed is you used to see maybe 10 companies. Now it's like 20 and they all have revenue. And so revenue is no longer, I think, as high of a signal because it's also understanding that revenue and where it came from. But I think at the earliest stages, to me, it still goes back to the founder. Like, is this founder amazing? And then they'll kind of figure it out. But I think weighing that, especially in the vertical side, it's like the AI expertise plus the domain expertise is sort of that sweet spot of founders for me, where you have the business sense and insights, and then the very strong technical leadership to go build something there. But it is kind of wild. And we run PairX, which is our early stage accelerator. And so next week is my week to go through all the B2B applications. And I can only imagine that there will be, 20 plus in each category of trying to sort through. But for me as an investor at the earliest stages, it usually just comes down to like the best founders and broadly building in a big enough market. But I think the best founders win every time.
I totally agree with that, and definitely that's our approach. I'd say in addition to kind of grabbing the best founders, and especially like really looking for kind of speed at this point, like the speed of execution, speed of iteration, maybe even more than in the past. That's always been important, but especially now, I feel like we're kind of all going down towards a longer tail of like sectors that you can build a vertical solution in, and trying to be kind of a first mover with a really fast moving team in a space where you can still build because you're replacing labor, a multi-billion dollar company. So a little bit's that, as opposed to hopefully not having to go into a space where there's 11 Series A companies, because that is a seed investor that seems like a tough bet.
So given the heightened level of competition, number of companies being funded and pursuing different applications, crowded competition, what advice would you give an operator, founder, CEO, head of product on trying to develop competitive advantage, differentiation within AI? What are some of the trends that you think and strategies that you see working?
For me, I think the cost of building software is going to is trending to zero. So I think it's hard to gain any kind of advantage on speed to market or so in the end it comes down to product, and then if you want to build a better product, it comes down to hiring the best people. So for me, I always advise founders, just hire the best people, and that's going to be your competitive advantage. And the second thing is like be very thoughtful about how you build the product, because it's not going to be you can't differentiate on the exact value proposition, but you can differentiate through the workflows and the customer experience. So I think today the customer experience, the bar is raising significantly, and people will just expect more from products. So for me, I always tell founders, go back to the basics, hire great people, focus on the product, and then I think distribution can sort itself out.
I think small tweaks in distribution in the early days can make pretty big differences. I mean, I think Hadley, you brought up healthcare. I mean, I think a bridge is the canonical example of that, where that Epic partnership really changed the game. I mean, I'm in one of the PLG centric scribes, where just the act of letting a doctor try it out, self-adopt, which is highly unusual for that area. I think that's really given some energy to a crop of companies that might have otherwise faced some hurdles. So I just like cleverness in early go-to-market seems to matter. And yeah, to your point about what the competitiveness, like on Tuesday, I was at Clock, which is a legal tech conference in Vegas, and you just walk in the hall and, you know, good for Harvey, good for Lagor. Like my instinct was, as Hadley said, when you have to go down to a more deeper niche or more verticalized version of that, because I was thinking after that conference, like, I'm not funding anybody else to go after the AmLaw 100, but I would be interested in funding somebody going after a particular subset of law. But yes, it was quite the experience to walk around a legal tech conference and have 3 generations of legal tech products and 50 vendors all selling, a lot of overlapping products. So I think as a founder, having that experience would probably be meaningful.
One other thing to add on this is, we're hoping to in terms of advice I'd give is to kind of have a second or third act in mind. Like these things can be hard to predict, but generally, I'll give you kind of an example. There's a lot of these companies, and we've invested in a couple of. There are these kind of voice agents for kind of answering the phone, which it adds a ton of value right away for certain types of businesses. But it's not defensible. So like, okay, you can start with that and you can actually grow. Like some of these companies are going from like 1 to 10 in 1 year, but that's going to get commoditized. What's the second act there that you have? Maybe it's a system of record, or my personal favorite is maybe there's a B2B marketplace, which I still think is different, is defensible even in kind of an AI world.
Mhm. Mhm.
I think the two big things that can help a company in the early stages. One is I actually think like brand and storytelling and like having some unique reason or like insight and then leaning into that. I think brand is going to become a pretty important part of the way that the way that the winners sort of emerge, and having that DNA early, I think, is really important. And the second is I actually think distribution matters a ton. Early distribution. How do you hack early distribution and have some sort of unfair way that you're going to get your first handful or first 100 customers? And then how does that create some sort of, unique moat around distribution for you? I think those are two things where, a lot of the products are actually becoming quite similar. But that's where I ask a lot of questions and diligence around those two things. And like, do the founders have good answers there and good instincts? And maybe it's my background as an operator on the go-to-market side, but like, I just don't think the best product always wins. I think you also have to win on like the best product plus differentiated go-to-market and some sort of network effect or like unfair partnership or unfair like founder brand that will help you grow faster. Is you look at every winning company in the tech space, they had something like that. And I think it's not only like a nice to have, I think it's mission critical in this like super competitive landscape that we're operating in.
I have just one more to add, and honestly, I hate this, but like you are seeing a decent amount of like king making, just raising a lot of money, and then everyone else is scared shitless. I think you saw this with Harvey. I doubt that was the best product from what I've heard, but I think there's a lot of that going on as well, which I dislike, but it's happening.
I keep on hearing people use the word the FU round. It means like, I don't need to raise this round. The milestone hasn't been achieved, but because I can, let me detonate that bomb, and then, I'll make a statement.
Make a statement to the market, stay away.
Yeah.
Yeah, this is my space. Related question. Let's say you're later stage, Series C, Series D. So you've been around for a while, you've got a business, you're not AI native, and you're starting to see competitors come in that are AI native, so they don't have the legacy infrastructure and the tech debt and all the UI that you've built that was built before AI existed. Any trends or patterns that you're seeing for how those later stage companies defend themselves and compete and try to prevent the disruption of an AI native entrant? Like, what's some of the best work going on for folks who just don't have the benefit of being born today? They were born yesterday.
I worked at Intercom about 10 years ago, and I think that like as soon as like OpenAI and ChatGPT came out, they just like pivoted the whole company and like went all in on AI support and launched Fin. And I think they like kind of bet the company around being first there and like putting a bunch of resources around that. I think that has been effective for them on the outside. I'm no longer affiliated with the company, but I think to do it well, like you kind of have to do that. Otherwise, I think you'll get left behind. And so whether you take a large percentage of the team to go do that or build a tiger team, if you're not doing it, like you're going to get left behind. I think it's going to happen sooner than people think. And I think the best companies, like I started my career at Facebook, and several times that company had to like we were about to go public and we had no mobile strategy for mobile ads, and Zuck pivoted the whole company. I think the best leaders recognize that and can see around the corners and aren't afraid to make that hard fork towards what you need to do. And I think we will see some people hedge and probably get left behind, and the people who make pretty definitive moves there, I think, can stay competitive because you have the relationship with the customer. So it's kind of yours to lose if you don't do it.
Yeah. Pivot hard.
Yeah, I think if you're selling to enterprises today, you're in slightly better shape because the churn will be less, and I think some of those companies will be wary of adopting a AI native company, and probably will want to wait a little bit, and it's probably existing relationships also in place. But I think if you're an incumbent selling to small companies where the cost of churning, like the churn is much higher, the cost switching is becoming lower and lower, I think it's going to be really difficult to innovate. And I think you just have to, it's going to be a bit of a war to talent, and then you got to have to kind of like speed up innovation. But I think it's difficult, right? And I think that's what's so exciting about the new AI companies. They can take market share very, very quickly.
Yeah.
It's funny because traditionally what you described, like a Series C company, was the one that I was like most scared of competing with as like a seed, someone leading a seed round. I was like, oh, they're still like nimble but they have resources. But at least while there are that have some that have done what y'all are describing, generally we're finding them not very strong competition. Like they're just too kind of ingrained with like large departments and product that's built that they have trouble turning the ship and making the necessary taking the necessary risks to kind of throw a lot of that away to kind of focus on the new world. So at least I think most folks are not doing this well.
I'm speaking as an operator of a Series C company. It is hard. I think my experience, we're a system of record, is that what we look for, what I look for personally, are what are the advantages that we have in data as a system of record? So unique sets of data that we have that others don't. So if you're a seed-based company, you may have great technology, but you don't have our data set in our case on relationship graphs. The second is vertical expertise on workflows and just understanding the customer, understanding the space, and then taking those two and saying, all right, what are the rifle shot applications that we can develop? We have a right to win as it relates to AI generally and agentic applications more specifically, and try not to get distracted building things that others can build, or you can simply open up your platform, make it more API based, and start to draft off a lot of those other applications that people are building. But pick the subset that you have a reason to believe that you have a right to win. And then to your comment, Hadley, you do have to take some courage and say, well, this is our roadmap and this is our strategy. The world has changed much faster than I think I've seen the world change, and since I've been doing this for decades. You have to have the courage to make those changes, push the company, change strategy, change roadmap. But all that I think mixes together as a series, at least for me, as a Series C operator.
And I think what's going to be weird is that we as venture investors, I feel like if you were to create a chart, like if the rows were the category, like customer support, and then the columns were like system of record company, what we call these like AI teenagers, like they got started 2015, 2017, pre-chat GPT, and then like the newer post LLM companies. I don't know if others share this opinion, but I feel like the end results can be fairly heterogeneous. Like there's nothing structural that says, you know, intercom. There's nothing structurally that says intercom can't do it. And maybe intercom wins. And I feel like in 5 or 10 years, when we circle the winner in the category by the different rows, I think it's going to be fairly heterogeneous where like there's no theoretical reason it's, oh my God, only the LLM native companies have the way to do it, but it's going to come down to choices, execution, team, which is very odd because I don't think I think anyone has the right to win if they make the right choices.
Yeah. The right strategic choices and have the right talent.
Yeah. Yeah. And so therefore you as an venture investor, I don't think it's right to say, oh, you should not do this early stage deal because of this incumbent. Because I think in 10 years, it's going to be fairly heterogeneous as to where the winners come from.
I think that goes to Hadley's point earlier. Like velocity matters so much. It's like teams that can ship. It's like my favorite thing to ask people between meetings is like, what's new? And if it's like nothing's new, you know, you got to be moving fast. And I think that slope of building and speed to execution is that competitive advantage.
I agree. All the years I spent as an operator and running product, it never seems like we're shipping fast enough, ever. Always trying to, and it's hard to measure velocity. Other comments on that question, on that topic? All right. I'd like to move to advice. We've given some explicitly, some implicitly. Why don't we start? Let's say you're a founder, a seed, got an idea, you're prototyping. Let's say if you're seed A, you're obviously further along than that. What advice would you give someone at that stage? Broad question, intentionally. Take it where you want.
I can go first if you want. I guess I'll take more the seed stage because I think, or I guess A as well. Like, make sure that you like iterate with a very small team and do that until you have like real strong pull from the market. I talk about this a lot, but like one of the most common fail points is teams switching from kind of product market fit searching, fit kind of deepening to early scaling too quickly. And a lot of that happens because founders understand that their level of true fit. And honestly, a lot of it happens because investors, maybe who do a new round or whatnot, want them to scale because that's why they invested, and they push them to kind of meet early numbers. And then they kind of get into like what I'd call like a local maxima where like, you know, they kind of built the company around a certain kind of product and go to market and attempt it just like never going to grow that quickly, and then they can grow just quickly enough to kind of not, you know, stay alive and look like it's doing okay. You know what I mean? So avoid that urge until like you're really getting pull from the market and it's like no one can like you can't service your customers fast enough, and you're not needing to kind of then I don't think you really have product market fit.
Yeah.
We'll keep going with the responses. I see questions are coming in via chat. So after we get the responses, I'll pivot to the questions via chat. But go ahead.
Yeah, for me, I think my advice is to founders is you know, of course iterate as much as you can, but try to think about your long-term kind of a moat, because I think today it's easy to build you know, kind of a almost a lifestyle business or like another AI sales agent or another kind of like automation tool of some kind and gain some traction, and sometimes, you know, pretty impressive traction, like a couple of million, and that can feel easy, I think, because there's just such a big wave of adoption. But I think before raising capital, you know, I always encourage founder to think like, what are you building? Or how are you going to make those products stick with your customers? And what's the long-term game here? Because there's too many businesses that I see that should be, you know, lifestyle businesses, or maybe the revenue quality is fairly low with high churn and so on. And I think that's something to watch out for.
So even if you're early, what's your strategic vision and the moat that goes with that strategic vision? And don't get too enchanted with some quick uptake of your product. That doesn't necessarily mean you've got a long-term path if you don't know what that is.
And also just the fact that, I mean, things are changing so quickly that, I mean, I think in the past, you might have been able to formulate a vision, and then, you know, over the course of 10 years, like, you know, if you saw an old world SaaS product in 2011, you just kept on selling that thing for another 10 years, and the actual product looked much the same. So, I mean, today, I mean, just in venture land, a year ago, we were all saying, you know, apps are wrappers, which I never believed, but like it strikes me as hard as a new founder thinking about it to believe that you can just think through intellectually, given that there's so much moving around with OpenAI, there's so much moving around with the value of the app layer. So it strikes me as there's a humbleness that you need where you have to be willing to change, move fast, interact with customers. And I feel like the grand strategic planning seems very challenging.
I think that you need to have some sort of vision of where you're going and like have a set. If you're going to raise venture money, then you need to be addressing like a big enough problem where you hit venture scale. I think the way though to start at the seed and series A is like tackling something very narrow and then earning the right to then, expand the vision. And I think sometimes people ship that bigger vision in the V1 of their product that is almost like trying to take on too much, where you're trying to be everything to everyone versus like solving a very real problem today that then you can expand from there. But I think the challenge there from that I see as like an investor is you see 100 companies, like take MarTech, for example, you see like 100 companies doing like the same thing. They're all going to end up trying to build this like AI marketing team. The question for me always is like, why is your starting point the strategic starting point where whether it is like access to the data or owning like the most important workflows that then you can build the layers on top of? So know where you're going, but think really hard about why that starting point is the strategic starting point. That's going to help you kind of realize, the layers that you need to build on top of. Because if you have the wrong starting point, it's really hard to back your way into the bigger vision from there.
Yeah. Agreed. Should we pivot to some of the questions coming in via chat? Julia, have you been running those? Should we just all read them, or would you like me to read it out loud? What's best?
However you want to take it. Essentially, the question is about founders and probably the lack of experience of some founders. See, Hadley has some thoughts on this already.
This is a good
Sorry,
first.
I actually, sorry, I meant to just read the chat.
Oh yeah. So in short, when you're investing in the founders, how critical is your role as an operator partner in the scaling of the business? Jeremy.
Sorry, I was just trying to understand the your role, like the you being
Investment fund. Yeah.
So my role as an operator in helping the company or picking the right company?
Yeah. Some of the most innovative, I guess, agentic startups, the hottest startups, are just the founders running them. They just lack experience. So when you invest in those, what is your role as an investment firm?
So basically, we've got some very inexperienced founders, albeit
Yeah.
talented, great ideas. What role
Yeah.
do you play as investors to support them and enable them to execute and scale, understanding that they don't probably have the pattern recognition yet to
Yeah.
figure it out themselves quickly?
Sure. I can start. I mean, I think across the venture ecosystem, I mean, different stages of folks, whether you're a pre-seed or a seed fund, or you're more of a Series A or Series B fund, you tend to help those entrepreneurs in different ways. I mean, I admire the seed funds that have those databases of like, wow, we've literally got a database of like every engineer in the ecosystem or like every go-to-market hire. And I think Signal Fire is an example of a firm that has a database like that. I'm just like, wow, if I was a founder, like that's really cool that these seed firms, have that information. They can make those introductions. I think that's the value in the early days. It's the help me find a great engineer, or I know who the good folks in sales and marketing are. And then at Series A and Series B, we if we're doing our job well, it's helping the companies land the right executives to lead the functions. So that's something that our firm has developed. But you've got 4 investors, so I'm sure everyone has a different perspective here.
Maybe one thing to add, kind of, because it's on this topic, it's interesting how you go through kind of cycles. Like I started investing 15 years ago, and you had a lot of young founders in the early days of mobile because it was new. And when you have a new cycle, it kind of gets rid of some of the some of the value of experience. So you had your kind of snaps, and a lot of these consumer companies are started by very young people, and then that kind of as we kind of they got more. There wasn't kind of a platform shift. It kind of shifted more, and you saw like kind of older, more experienced founders generally getting funded. I think with Gen AI and agents, you've seen it kind of come back where you're seeing more and more young founders with who haven't had a job before, like creating really cool stuff. And yeah, I just maybe I'm not sure I'm answering the question, but it is kind of an interesting dynamic, and I think you're going to see this a lot more, and it puts more of a burden on investors to kind of work them, and if they don't know the basics of hiring and go to market, like it's more on us and making sure that we're kind of supporting them in those endeavors.
Yeah, I think at Pair, I mean, we do pre-seed and seed, and we do a lot of kind of young founders, like builder founders. And so I think for us, we take a few different approaches. One is like we run an accelerator that builds in a lot of this support that kind of like every founder needs in going from pre-seed to seed. So things like hiring, like early go to market, like how do you do early kind of founder-led sales, like all this stuff that kind of every company is sort of going through. So we try and like programatize that to some extent to like help them, and also provide that peer network of people that are all kind of going through that together. Because I think investors play one role. I think having peers and companies that are kind of similar stage going through that is also a helpful thing. So I think, you try and programatize it to the extent that you can, build that relationship with the founder. But I think it's also a delicate dance where, the best founders, kind of can figure it out. And your job as an investor is to ask good questions, help them get to the answer or get the resources they need faster and accelerate some of that learning. But I think it's delicate if then you have to, handhold them too much, then I think that's a crutch and not necessarily setting them up for success. And one area where at Pair we specifically have invested quite heavily is around like hiring. I think that is something where like I tell founders, like every founder needs to know how to hire. It's kind of the same skill set as like going to raise money. Like you have to convince people to come on this like crazy journey with you. Our talent team, we have like 4 pretty senior in-house recruiters that help our founders. A lot of it is not just fishing for them. It's like teaching them how to fish, because that's going to be their job. I mean, Ken, I'm sure you're spending a huge amount of your time hiring, even at like, the stage where Affinity is, where it's kind of the job of the founder always to do that well. And I think I've noticed the best companies tend to have these like really high density talent, magnets of companies. And so I think that's an area where we see pretty high leverage at Pair of like helping companies kind of figure that out and crack hiring early. And I think that compounds over time for the best companies.
Hey, those are great comments. But taking it from an operator perspective, both now as I guess, a more senior operator, but going back to when I was one of the folks who was just learning and straight out of business school, I think the people who are most successful, not just early in career, but I still do this today, are those that obsessively seek out, build, develop an expert network. So when I come to a company, for example, I've got lots of people who I consider to be best in class best in class CROs, CCOs, CMOs, a level down, and pair them with people on my teams and make those introductions to other people in my network who may be early stage founders. So just being relentless about trying to learn from other people who have already done what you're trying to do, or some portion of what you're trying to do, so you can learn on their dime, from mistakes that they've made. The second is, you mentioned hiring, Kathleen. When I was earlier in career, I was always reflecting on my gaps and trying to hire people who had done also what I had not done. So I was usually hiring people almost always who were more senior than I was, who were more experienced than I was, or at least more experienced. Maybe technically they may have reported to me. And between hiring and advising, that's how I think that can be the difference between scaling and not scaling. Because by trying to figure this out, no matter how smart you are, purely through first principles and solving problems that way, the rate things change, that's very hard to do, no matter how gifted you are. Other insights on that topic, how you support early?
I think for us, we're trying to kind of to tell founders to build for the long term, because it's a pretty tricky environment. Because if you're a founder in AI and you're scaling very quickly, You can get away with raising at very high valuations. Money is easy. Terms are going to be very favorable. Often, we see term sheets with little oversight, actually, sometimes like no board seats and extremely founder-friendly terms, often with secondaries at very early stages. So when you're a founder, it's easy to optimize for the short term and feel you're feeling on top of the world, right? Especially when you're scaling very quickly in the early days. So we try to tell founders to build for the long term and think about what's next. If you're raising at a very high valuation, what does that imply for the future rounds? And also we try to pair them with founders who've seen like difficulties and founders who've gone through several rounds of funding, etc. Because at some point, things are going to become more difficult. But that's an interesting trend to see very young founders receiving very attractive terms, and that's often a recipe for disaster if it's not handled properly.
It definitely can be a blessing and a curse. And you've got that high valuation, which way I think of it is almost by definition, you need to grow into it. And at any point, if you fall off that track where you're not demonstrating the financial results that support that valuation, that can get very difficult, to raise your next round and to retain people and continue to grow that business. Sometimes going after the highest valuation is not always the best thing. Speaking as an operator, I've definitely turned down capital that was at a higher valuation because I didn't think that was best for the business and the right partner. Other comments here? Julie, anything you want to hit on the chat questions that we haven't hit thus far?
Yes, we have 10 minutes and would love to address the future of investment. How do you see generally like any trends, GPUs over headcount? Yeah. What are your thoughts? Kathleen, let's start with you.
Sure. I mean, I think that I'm pretty bullish on, the application layer. I think it's just a really exciting time. I think the world feels a little bit crazy and chaotic at the macro level, but I think where we invest at the earliest stage on pre-seed and seed, it's really exciting. I think there's strong willingness, I think, for people to try new things at the B2B sort of software layer. I was just at a conference a week or two ago, and the CMO of Samsara spoke, and she basically said no one on her team is going to get a high rating from a performance review unless they're using AI. I think you're seeing these top-down mandates from the Shopify CEO to like kind of a lot of folks that follow suit. So I think there's strong willingness to engage in a way that there's a very strong why now for companies going after these markets. I think companies are so lean and small, which I think is from my opinion, like more fun way to work where it's not super bloated. If you're starting a company today, you kind of get to have all the benefits of this strong technology, be an AI native company. And I think the way that companies operate is going to be just so interesting to see over the next, 5 to 10 years where smaller teams can have just huge impact on markets. And I think there is strong willingness for people to try software in a way that kind of reminds me of like the early mobile days where it was just like things were like blowing up. The long-term durability and defensibility is, I think, the open question and like what's really going to shake out here and what isn't. But I think I'm like super optimistic in terms of, what we see at the earliest stages. And I think there's so much excitement, particularly someone mentioned this around like younger founders. Like, I think, these are AI digital native people that are, pretty young in their careers and able to kind of build these things very quickly and have, strong traction, get into conversations with big enterprises. So I think it's a really exciting time to be starting a company. I think the hard job, don't feel bad for VCs ever, but the hard job is like there's so many great companies being started. So I think for me, it's been kind of sorting through, who are the best founders that have the most unique insight. And I care a lot about, kind of distribution and go to market and like, do these founders have both amazing product sense that can build like a really good product, and can they win on go-to-market? Because I think, one is not enough. You need both, particularly in a pretty competitive market like we're in now. I'm optimistic.
Yeah, yeah. I mean, the great thing about being a VC is that Mark Andreessen says we'll have the last job standing, so it's good to have like a lot of job security. Which
I
I
was
personally
wondering when
actually.
that would come up.
um, Yeah, I don't know. I don't really kind of share his opinion on this, although, he's a smarter guy than me, so he probably knows. But I mean, one thing that I kind of think about is, or wonder about, is like what venture in the startup ecosystem looks like going forward. If you take some of the dynamics around just the needing less, or the more and more leverage you're getting to build products. um, I think you could see a world where startups could raise a lot less money, and I think you're kind of seeing a little of the reaction to that, where more and more venture capitalists are kind of focusing earlier. A lot of the multi-stages are focusing more of their resources down on seed, and that's for a number of reasons. But I think one kind of long-term reason could be around: do these companies do actually need that much, especially at the application layer? Like, certainly infrastructure is kind of a different beast. Um, and then you also have kind of a decent amount of consolidation with fewer funds raising bigger and bigger funds, and like, how are they going to deploy those funds? I don't know how that shakes out, but it's going to be a really interesting dynamic. I have a feeling that in kind of 5 to 7 years, and people have said in this past, and we've all been wrong, and venture tends to look very similar as it has in the past. I do think there's a good chance that venture could look quite a bit different than it does now, but we'll see.
Just even at a personal level, I've found that the way I've been working and performing diligence in the last year is very different. I mean, I'm, looking at a fairly niche opportunity in a vertical I'm not super familiar with. Like in the old world, you would go to your associate and you would try to build a market sizing. And now I just run a whole bunch of deep research queries, and you know you you as a venture firm, I mean, I think for the last couple of years, a whole lot of the larger funds, Scale being one of them, but everybody has been doing the scoring. Like, look at the founder backgrounds, look at the web traffic, and can you create a score, putting that all together. I think that's just gotten much better, even quite recently. I mean, with what you can do with Exa functionality, where you can now almost create attribute level groupings on founders. So you can create these unstructured data sets, and then you can almost ask Exa to create the attributes. And I've even done things as crazy as, I literally put in the names of the companies in ChatGPT, and you ask, which one do you think you should invest in? And it actually gives the venture consensus answer, which is bizarre. That, I mean, I don't know what it says about venture consensus, but I've just been watching my own behavior in the last 3 months with deep research, with Excel-like functionality, and even just chatting with the bot. And I mean, we used to vote as a committee. I mean, we vote as a committee. Everybody at Scale votes on a scale of 1 to 10 as an investment. I'm talking to our tech team. I'm saying, why shouldn't deep research be voting? Like, I mean, I'm not saying it's right or it's wrong, but I'm just open to newer ideas on how to think through it.
Fascinating. How much of the vote does deep research get? Get 51% or less?
Got
to prove its worth. So who knows?
Ultimate
On that
approval.
front, we use a lot of AI tools just in our day-to-day of how we run Pair, and it's so nice. It's like amazing. We have, like AI does the first version of our memo based on the deck that we get sent, and we have, scoring for founders based on their background stuff. It's awesome. I couldn't imagine having to do this job without it.
Yeah, I don't think any junior here has written a market section of a memo in the last few months.
We actually had to split our memo out to be like the facts and then what is your actual opinion that's not written by AI.
Yeah, I mean, it's gotten to the point where when an associate actually does one, I'm like, do I trust them or do I check them with deep research?
All right. Any comments before I start? I was going to do some summary here and start to bring us to a close. Julia, does that work? All right. So real time, I've captured a few points. I'm going to go with 5 of them. See how well this characterizes the conversation today. So the first relates to the importance of go-to-market fit. I have a philosophy. I use it at my companies that I call nail it, scale it. It's a bit oversimplified, but the basic idea is that most issues, many of the issues that you often face as a operator are when you scale prematurely. You start throwing a lot of money at go-to-market, a lot of money at, whether it's marketing, sales, hiring AEs, or your roadmap before you actually have a reason to believe they have product market fit and also some level of go-to-market fit. So you've got a product that delivers on the promise and can be successful. You've got a value proposition that sticks and a model for distributing to the market. Once you've got that, scale violently. I say so. Nail carefully, scale aggressively. Two, as you're doing that, velocity matters as you start to scale. I mean, it's speed and agility matters in the nail it phase, and velocity matters in the scale it phase. And that's with respect to product. And to your multiple points, Kathleen, don't forget about the importance of advantage through go-to-market. I've experienced situations where very smart go-to-market decisions boxed out whole groups of competitors to the point where the challenge became becoming complacent because the competitors couldn't get in and I had to push yourself. And then my fourth is even if you're later stage, so you're not being born or founded today in an AI native world, you need to be bold, pivot hard, and likely go all in on these new capabilities. And then five, regardless of all of that, it's still, in my view, and I think supported here, it's the best teams, the best founders, the best people ultimately figure out the right answers. And then as an epilogue, if you're going for funding, check with AI first and see how compelling your pitch and your team and your product and your data are. I'll pause there. We got a minute or so left. Any additional comments, agreements, disagreements, plus ones from today? Going
Amazing.
once, going twice.
And we have 2 minutes left. How about we make it just, shameless self-promotion, affinity. We have some customers here on the panel. Let's go.
Oh, for me.
Yeah.
Yeah. Shameless self-promotion. So we are Series C business, so we're not AI native. We're aggressively working on how do we, through rifle shot strategy, leverage AI for value. And our strategy is take the unique data that we have, take the unique understanding we have of venture capital workflows, private equity as well, and use that as a way to deliver value that even an AI native company entering our space would struggle to deliver. We started down market with lots of smaller firms, including Pair, and then have been moving into larger and larger firms and then to adjacencies such as private equity and investment banking. So, in the form of shameless promotion, if any of you think that might be a fit, please feel free to reach out to me or reach out to anyone on my team. Thank you, Julia, and thank you to the panel, and thank you for everyone who participated and was on the call today.
Thank you so much. What a pleasure.
Thanks, everyone.
Thank you all. Bye now.